All right, so I'm recording now. All right, so you're welcome, guys. Good evening. You're welcome to RBTM 301 Bootcamp 2.0. You're welcome. You're welcome. You're welcome. It promises to be awesome. And like I said, I'm not going to be doing it in such a way whereby you are not going to be able to utilize what is being taught. Trust me, whether you are in any paid group, any master class that's going to go on afterwards or anything, pretty much anything you are going to be learning from here is something you can start implementing or implementing in the Forex market. And just so that I get this out of my mind, on Monday, like I promised, we are going to be having a live call. And I like the fact that Monday is a public holiday. I hope it's not going to be affecting the market. Let me quickly check something. Let's check together forexfactory.com. Let me see if there is bank holiday on Monday or not. So on Monday, all right, just NZD and AUD bank holiday. So pretty much the Forex market, the USD is going to be moving, so we can trade. We are free to trade on Monday. So since Monday is a public holiday, it makes it a whole lot easier for me because I will not be going to school. Pretty much I want to take a lot of rest on Monday. So we are going to be having a live call. Our live call is going to kickstart by 7:45. 7:45. Of course, the market is going to open officially by 8 o'clock. I mean, the section kicks off by 8 o'clock. So by 7:45, I pretty much am active on my chat. So I don't want you guys to be late to the call. All right. Now that's out of my mind. Now, the second thing I want to do for tonight is, please, I want to ask you for a favor. If you have any mentor, if you're on any paid platform, can you go to that group and type thank you coach? If you're in ATM Plus, can you go and tag Papa Jimmy and say thank you Papa Jimmy? If you're on STF, can you go and say thank you Coach Tony? Any platform at all that you are on, I want you to try. I want you to right now on the call, I want you to call out your mentor and appreciate them and thank them. You know, there's one key. If you were in the pre-boot camp, you understand the spirituality of trading, and Thanksgiving is the seed to more. You understand? Thanksgiving is the seed to more. You're about to learn something more. All right. So give thanks to people that it is due to, like your mentor. Whatsoever they are, I want you to genuinely right now, tell them thank you. Like, tell them thank you. Thank you for your love. Thank you for showing us the way. Thank you for teaching us. So please, can you go to that? Can you do that in the next, let's say, 2 minutes? 2 minutes. I want you to spam every group I'm on. I'm on ATM Plus. I'm on our STF. Can you tell them thank you? Can you tell them thank you? Like, call them out and tell them thank you. I want you to spam that group with a lot of Thanksgiving. I want you to do that right now. Papa Jimmy, Avilia Global Exchange, Avilia, Fortman, Charles. I think these are a couple of guys I know. Can you tell them thank you? Like, they have really been good. And I'm seeing just 2 people thank Papa Jimmy. Yeah, Jeffrey as well. I think Jeffrey also is a mentor. He's also a teacher. Can you also help me tell him thank you? Jimmy platform. Come on, that group has like 2,000 people, 2,000 plus people. Come on, guys, we can do this. I'm not saying you should tell me thank you. I know you like me. I know I'm ice cream. Everybody loves ice cream. But come on, tell your mentors thank you. Coach Tony, Papa Jimmy, Jeffrey, Fortman. Tell them thank you. Tell them thank you. I'm a Christian and I listen a lot to Apostle Joshua Selman, and he used to reiterate a lot on honor. Said honor is a gift. You understand? There are graces on these people that you need, and you need to tell them thank you. They don't need to do anything for you before you tell them thank you. You understand? Yes, tell them thank you. Tell them thank you. They deserve the gratitude. They deserve the gratitude. I'm not a storyteller, but honestly, if I didn't join ATM Plus, I wouldn't have met Coach Tony. So some of my private mentees, if you didn't join, probably let's say STF or ATM Plus, you wouldn't have met with me. All right. Every single person deserves your Thanksgiving. All right. Yeah, Musti, can you tell Musti thank you? I know Musti as well. There's this person, I'm trying to remember his name now. I don't know where he is. He'll be, I think, yeah, he'll be also was my mentor at some point. He'll be also was my mentor. Can you tell them thank you? I don't know, why is nobody taking fault? The fault offend all of you. Come on. All right. Now that we have gotten that out of the way, let's continue. Let's proceed. Thank you all. I'm grateful you guys did that. I'm grateful. Thank you. I've been saying I was going to do that since the boot camp. I kept on forgetting. All right. So before we get into this chat, I know a lot of people want us to, let's just get into this market. I want us to get into this thing. I mean, nobody is in a hurry, right? It's a boot camp. I'm good for the next 3 hours. If you are with me, I'm good for the next 3 hours. And you know I can do that 3 hours, right? So let's get on the way. And the first thing I'm going to be doing tonight is speaking from experience. Let me delete this and get a clean chart. Speaking from experience, I want to identify 10 mistakes. I wrote down in my notes here 10 mistakes traders make or traders often make. So, let's put that there. And let's start off by saying 10 mistakes traders. Now, when I say traders, I didn't mean Forex traders, all right? So you are trading gold or anything at all. 10 mistakes traders. Should I use commonly or often? Or should I just say make? Let's just say make, please. Life can be easier for us. 10 mistakes traders make. 10 mistakes traders make. 10 mistakes traders make. Let me see. I think some people are having issues joining this call. Let me see if there's a way I can put up a link. Invite members. Send them the link. I guess if they click this link, they'll be able to join. I'm pretty sure they should be able to join. 10 mistakes traders make. And I wrote here that number one. And most of what I'm going to be saying is from personal experience. Like personal experience, what I've experienced myself. All right, not just probably maybe I read it somewhere or I saw it somewhere. Something I experienced that I had to grow out of. And one of the first things I've seen is lack of confidence in self. And when I mean self, I mean ability, analysis. Yeah, I I wrote here that lack of confidence in self and analysis. Then I wrote here that this is generally because of clouded judgment. This is generally because of clouded judgment. This is generally because of clouded judgment. Let me see. Let me do something like this. So I can make this a little bit smaller. Let's bring that down a bit. All right. Lack of confidence in self. Now, I'm going to give you an example, or a real life situation that happened to me over the week, or over the weekend, while we're having the pre-boot camp. Before then, I was listening to Koinonia sermon, and I normally do my analysis anytime I'm listening to Koinonia sermon, probably because I'm less busy at that point in time, or probably maybe it's just an habit. That's when I normally do my analysis. So after doing my analysis, I sent it out to all the platforms I'm on, and then after sending it out, we started the pre-boot camp, and I think Coach Villia was speaking, and then while he was talking, I was on ATM just trying to read up on the chat and everything. And then Mazi said something, and he said, I think he tagged my DXY analysis, all right? He tagged my DXY analysis, and was like, pretty much I have the same analysis with Omar. I don't know, and before then, I didn't know who Omar was. I didn't know who he was. So I was like telling him that he should give me the handle of Omar on Twitter. Let me try and follow him up to look at what he also analyzed and all of that. And then while I was busy looking for that, I stumbled across his video that he already made, I think a 3-minute video on DXY and EU, I guess. That was that Sunday. And I watched it, and pretty much Omar had the same analysis, like literally to the teeth, the same analysis as what I had. I had not watched his analysis before doing mine. I don't know Omar from anywhere. And I was like, oh God, like literally the same thing. Now, what that did for me was it boosted my confidence in my own personal analysis. It was almost as if, yes, I respect him because of probably the fame and he's been long in the game and all of that, but it boosted my personal confidence in my own analysis. And that's not the first time those kinds of things are happening to me. You understand? There are a couple of times whereby Coach Tony will post an analysis and I'm having the same thing as he's having, and it's almost as if we are seeing the market the same way. And all of those things helps in boosting my confidence. Now, I know there was a lot of hard work that went into me getting to this level, but people lack confidence in themselves. Now, that Omar analysis I saw, if Omar had a different perspective to what I had, it was not going to change what I wanted to say in the market. Pretty much no. I have confidence in my analysis. If I go wrong, then I'll learn and readjust my lens. You get what I'm trying to say? That you should make sure you're having, like most of my mentees, what I used to do to them is I used to tell them that, see, before I post my own personal setup, I want to see you post your own first. So that it will not be that you are deriving your own analysis from what you saw me do. No, I want you to show me yours first. Then you see mine. You understand? Then if you think mine is wrong, then you ask the question like, okay, coach, I was looking at this thing. Why did you do it this way? From there, we can come together on a singular page and say, oh yeah, probably I made a mistake here. Oh, this is why I marked this out. But not that after I then send out a chart, that's when you then send in your own. No, that's cheating. Do you get what I'm trying to say? That people don't have, they don't learn, or traders don't learn to build confidence in themselves. And this is the reason why there's a lot of fear. Like yesterday, there was no FOMO for me. I was not afraid of losing out on that trade, on that EU trade. I was waiting for EU to come into that balance price range, that imbalance below. But EU did not come. EU only tapped the open of the other block. Now, the only reason why I missed out on that trade was because the stop loss was crazy for me. Then it was too much. So I was waiting for them to probably come a little bit lower. My analysis was right. The only reason why I didn't get into that trade was because I was just waiting for them to come a bit lower. Now, that same thing I posted was the same thing I think Omar, Real Weird Jean, and one other guy on Twitter, on my Twitter story, they had the same thing. And I didn't see this before. And even in the morning, you could quite reiterate that I said I was going to be maintaining this specific analysis. Now, that's me having confidence in my ability. I know what I'm looking out for. If I'm wrong, yes, I'll learn the lesson, I'll readjust my focus, I'll put it in my journal that I tried this, it was wrong, and I'll not make that mistake again. That way, my confidence is being built. That way, I'm not afraid this price is going to reverse. I'm not afraid. No, it doesn't happen. So this is one of the mistakes I feel traders used to make. They don't have confidence in their self and in their analysis. And this is basically because of what? Clouded judgment. Why? Because you saw someone else's chart and the person's chart is different from your own, and then all of a sudden you try to readjust your focus, and this person is looking to be bearish on gold, on the DXY this week, and you were looking to be bullish, and then all of a sudden you said, because okay, this person is actually correct, you then adjusted your focus to be bearish, or to the other way. I can't really remember what I'm trying to say. And then only for you to find out that at the end of the week you were actually right and that person was wrong. This happens a whole lot. So I want you to pick out of one of the things I want you to pick out of this bootcamp is what? Learn to build confidence in yourself. And this is the reason why a lot of people used to want signal groups. Some people really literally want me to tell them that buy at this specific price level. Buy at when EU gets to put your stop loss here, in fact, some people, if they have the chance, like we used to say, they'll give me their MT5 to be trading for them. Please, I want you to build, the goal of trading is for you to be independent. Be independent. I feel that's the goal. So that, because I'm not going to be here every time. I mean, if you've noticed most of my charts, there are times whereby I used to post my charts, the ones that are from my system, and some are from my phone. Trust me, anytime you see me posting any charts from my phone, know that I'm in class at that particular point in time. I'm actually doing something else at that point in time. And for me to be, say, doing another thing and then still be right on my chart, trust me, is some level of expertise. Now, not that I'm being proud, all right? No, not at all. But it's just some level that I've built myself to. You understand? So that's the first thing I've noticed. Then number two, I wrote here that not having a plan. Number two, not should be capital. Not having a plan. I wrote not having a plan. Then I say some have, but don't follow strictly. They have, but they don't follow strictly. Now, this is the second mistake a lot of traders. And remember, I said I'm saying this thing from example as a mentor to some traders and what I've seen and complaints that have gotten to me. Some people don't have a plan. They don't. They just want to and when I mean plan, I don't mean probably money plan. They don't plan their trades. Okay, what are you looking for as EU? They just look at, EU is printing a bullish candle, they quickly buy. EU has printed a bearish candle, they quickly sell. They are not looking at price, like, because price, I think Ayodeji was the one saying price has a story it is telling. Yes, they don't know, they are not sure of what price is saying at a particular time. When are you going to buy? When are you going to sell? What are the conditions supporting your buying bias? What are the conditions supporting your selling bias? Some people just enter the trade, and there's market created this high, this low, and then what's your 4 hours bias? What's your premium discount bias? What's 15 minutes telling you? What's 10 minutes telling you? What's 1 minute telling you? Because you see a break of structure on 1 minute, you then feel you should sell at that point in time. You then feel you should buy at that point in time. It is wrong. It is wrong. You have seen the way my chart is when I send my this thing out. When I send my analysis out, what is going on in my mind, that's strictly what I am going to do. I'll tell you, I'm looking at price coming into this range because of this reason, because of this reason. I am planning my trade, and that's the way I write it in my journal. Aside not having a trade plan, they don't have a growth plan. Yes, I know we are going to get to account growth on Sunday, but they don't have a plan. When price is at, when you are taking a trade, your trade is already running at a 1 to 3. You are very quick to not close partials. You are looking at, and the total TP of this thing is 1 to 15. Let me hold my full position 1 to 15. At the end of the day, price reverse takes you out at stop loss. You didn't break even. You didn't. No, don't do that. They don't know where their target is. I'm looking at price creating a new higher high, meaning I'm looking at it taking this external liquidity. I'm looking at price coming into this imbalance here, meaning I'm looking at price taking out this internal liquidity. Some people just don't have a plan. And the reason why I'm saying this is because I'm a victim. I learned all of these things from experience. I know what I'm saying. Some people, price is ranging in loss, and they are so quick to close it out in loss because what? This trade could just hit stop loss, Jerry. All of a sudden, you close the trade later did not hit stop loss, the trade reversed, hit your take profit. Now you are feeling bad. Why did I close the trade? I mean, before you entered the trade, you already have a pre-specific amount you want to lose. You have not lost that amount. Why are you so quick to close the trade? Before you got into the trade, you already have a specific target you are aiming at. I'm risking $10 to gain $30. All right, you're already at $30. You're already allowing greed overcloud you, and you're not taking your partials at $30, only for price to reverse, and then you later ended up closing that trade at $10. Has that happened to you before? The trade has already gone to like $50, only for it to reverse, and then it went to $20, and all of a sudden you're out. Yeah, a lot of people don't plan. They don't plan. And while I'm even saying a lot of people don't plan, a lot of people don't know when to stop trading in a week. I mean, this week, how much are you planning to win? How much are you planning to lose? You are planning to lose $50 this week. You have lost $50. My friend, get out. Go and do another thing with your life. Trading is not the only thing your life is centered around. You have lost your $50. Walk away. Go and clear your mind. Come back next week. I mean, you are planning that this week, I want to make, say, $150. You have already made your $150. My guy, rest. Go and do other things with your life. But some people they'll tell you they are pushing themselves to the limit. I want to break barriers. I want to push myself to the limit. This trade is too clean for me to ignore. You are not disciplined. That's the word. You are not disciplined. Adjust. And you know the way Apostle used to say it, there's no tell them. We are talking to ourselves here. And I'm sorry if I'm offending you, but learn. All right. Let me check the chat real quick. Do I have a message on the chat? All right. All right, there's no chat there. All right, the third thing I wrote here, probably maybe I'll give 5. Then tomorrow I'll give the remaining 5. Are you cool with that? Or I should just give the 10 this night? Yeah, if you say I should give the 10, I've already planned my weekend for boot camp. So I'm good for the next, in fact, I'm good for the next 5 hours. Number 3, unstable. Unstable. Yeah. And I wrote unstable. I wrote in my notes here, unstable in the sense of strategy. Did I get that right? Strategy and concept. Unstable in the sense of what? Strategy and concept. During the pre-boot camp, if you remember quite vividly, Avilia was talking about people going from one pillar to post, looking for the next big thing. The next thing that is raining now is which one is raining now in the market? Which setup is raining? Which analysis is raining? I don't even know. I don't know. That's the next thing they are going to. They have not mastered one that they are doing currently. They have not mastered smart money concept. They are already going into ICT. For me personally, I think I started up with SMC. Let me say I started up with SMC. I mastered SMC, then I went to Wyckoff. Then after mastering Wyckoff, I went to market geometry, manicure. Yeah, I went to market geometry. After mastering market geometry, no. I think I skipped harmonics. Yeah, I skipped harmonics. After SMC, it was harmonics. After harmonics, it was Wyckoff. After Wyckoff, it was market geometry. That's wave theory. Market geometry is wave theory. Then after wave theory, I went to pattern trading, MW, wedge, breakout, and all of those things. Yes, I like learning a lot. And then after that, I think I got into ICT. And then I had to sit down with myself to look at this thing. Which one is the most profitable? I discovered that still, like, this life is not hard, though. Yeah, life is not hard at all. For instance, I used to do these things to my friends at home, and I think one of them is on the call. When we are playing game, I don't used to play with them. That's PS2, PS3, PS4, PS5. I don't used to play with them because they'll beat me. And well, I like playing with computer because I can beat computer. I'll put it in novice. I want to beat them. The goal is to win. How to win? Why should I make life intentionally hard for myself by putting it in legendary when they will beat me? I don't do that. I don't do that. So call me a novice. Give me some minutes, guys. Let me adjust it. Like 1 minute, I'll be with you. 1 minute. I want to switch on the air condition. All right, I'm back. So, like I was saying, I will never put the game in legendary. I don't like, don't beat me, please. I don't like, life is not hard. So, I only discovered that after learning all of those things, and trust me, I spent a lot of nights learning all of these things. I discovered that SMC and ICT is the most profitable and the easiest. Why go 1, 2, 3, 4, 5, ABC, XYZ, I mean, just because I'm looking for a trade in London section, before I finished out, the market has moved. Yeah, I know there are people that are very profitable with it. They learn the pattern, they are very fast with it. Well, it just does not work out for me. The one that works out for me, I learn it. I stayed with it. So, invariably trying to say, be stable. Which one do you want to focus on? Which one are you focusing on? Are you an SMC trader? Focus on SMC. Master SMC. I mean, master it. I really envy the way, what's his name now? Coach Jeffrey, right? I really envy the way he trades. It's not like I like it, but I mean, this guy, before you know it, before, during, after, 120 pips is out of, and yeah, consistently, every single time. I'm like, how does this guy do it? I can't trade like this. That's mastery for you. At some point, I'm like, people are going to meet this guy, maybe he will teach you how to do this thing. Sharp, and not scalp the money, come out. Like, and he's on, just trying to say, be stable. Like, stay in one place. Stay in one place. From this coach to this coach, from this coach to this coach. The next thing is, this person is very good. That's the person you start following. All of a sudden, all the ones that you're already still trying to assimilate and settle down on, you have already started forgetting. And then you keep on trying to want to, what's it called now? You keep on trying to want to implement the new things you are learning in the market. And because you have not mastered it, you keep on losing money. You keep on losing money. You keep on losing money. And whether you like it or not, the bootcamp we are doing, there's nothing new as it's were that I'm trying to say. Forget the name, inducement and the psychology of its structure. There's no different higher, low, lower, high, lower, low, break of structure. What's it on? It's just packaging the thing to allow people, because I'm very annoyed with the things some people do out there. They take a lot of people's money only for them to start teaching the things they know already. And they don't even teach it well as they know it. I mean, I was talking with Fort one time. Fort sent me the video, and I'm talking on this with all due respect to these guys. Like, he sent me the link, and I was watching all their videos. And I was saying, I told Fort, I said, guy, this is literally the same thing we do. In fact, the training that they are paying thousands of naira for or dollars for, I have that video, that very, very video, internal and external liquidity. I have it free on YouTube. It's free there. Like, and I'm like, are you sure I'm not going to remove this video there and put a price tag on it? Now, knowing fully this is what is out there, then how do I want my masterclass to be? Trust me, my masterclass is not my masterclass is more on discipline or more mastery. So, invariably just trying to say that be stable. Don't jump from pillar to post. Be stable. Coach Tony now, Coach Tony can analyze, let's say, 5 to 10 assets in a week. And if you've noticed, he only focuses on like 3 or 2. And I hope you know that one time we did a call, STF guys, you are here, right? We did a call, and that afternoon I said, every single asset has a trade idea. Because you are not seeing it does not mean it's not there. And we analyzed every single trade from A to Z, every single Forex asset, and we brought out a trade from every single one, isn't it? We did that. Everybody knows about that. So just master the one you are doing. Be stable. Don't jump from pillar to post. That's the third thing. Number 4. What did I write here in my notes? Number 4. Money first. Mastery later. Money first. comma, mastery later. A lot of people are on this table. I'm shaking tables, right? Let's shake the table. Let the table break this night, please. Let it break. Money first, mastery later. A lot of traders, the reason why they come into Forex is because they see that you can make a whole lot of money in Forex. And they forget the fact that you need to master Forex first. I mean, who goes into a business without knowing the business first? You can't just wake up tomorrow morning and say, because it's Saturday and we're in layer period, you start selling abaya or what they call it. I mean, you just invest your money and your own money, your container will boom me. God forbid. You understand? A lot of people want money first without mastery. So when they pay for the trade, when they pay for the mentorship or they get in line with the strategy and all, instead of them to start demo trading, they are looking for the next $100 they will put in the market. And of course, you are needed because you are liquidity. No problem. You are needed. But take my advice. You know, we used to say this thing that if you don't know liquidity, then you are what? You are liquidity. Remove yourself from the table of being liquidity, all right? Remove yourself from that table. Instead of them demo trading, yes, instead of them demo trading and mastering the idea, they will not demo trade. I know a lot of people used to like it, like, don't be like me. There's a way I used to do my things. I like learning the hard way. But at some point, I had to learn the hard way, as it said. I used to like losing my money so that it will pay me and I will learn this thing. So that you know that, Philip, is money you are using. You need to stop losing this money. But at some point, I just discovered that, man, Philip, you can't keep losing money like this. So. You can't keep losing money like this. If you look at the inputs and the outputs, they are not balanced. They are really not balanced. So you need to adjust. And then I started demo trading. Started learning the concept. Started learning the concept. When I felt I was balanced to some level, I put a little bit of amount that I know that I can afford to lose. Emphasis on what? Afford to lose. Then I put it in. Maybe, and the way I used to do my thing, I'm a very wise person. I first make sure I get my money back first. If I load $50, I try to look for that $50 back. Withdraw my $50, then leave that $50 there. The other one, then start building on that one. So that even if I lose the money, it will not pay me so much. It will pay me, but it will not pay me so much, you get. So that's how I started. I continued growing. And all of you have seen the way I used to flip my account. You have seen it. I've done $10 to $100 before. It's not a new thing. I've done $100. I've done a lot of flip. All right. I've done a lot of flip. And at some point it worked out. Some point it does not work out. I do a lot of that with synthetic. When I want to humiliate synthetic, I do that. So invariably saying again that what? Mastery first. Don't come into Forex because of the money. You will be wrong. Don't. Mastery first. Master it. And mastery does not come in 1 week. Mastery does not come in 1 month. No, it's a lie. Anybody that tells you that is lying to you. Is a lie. You can't master it in 1 month. You can't master it in 2 months. It's a lie. Don't be swayed by all these things that you are seeing on Instagram. Most of those things on Instagram, they are Photoshop. And you know, I've been a victim before, but I don't know, me, God used to help me. You know the way they used to start trades on US30? Like at every point, you are just seeing them taking a lot of trade. See, I've done it before. I have the screenshots on my phone here, and I didn't do it with Photoshop. I did it with real money, withdraw the real money. So I'm not fooled by most of the things I see online. If you like, show me trader, and even if you're a real trader, or if you are really an experienced trader, you can spot when someone is lying and when someone is not lying by seeing the chart easily. I see a lot of people, they will just come online, they will post 50 lot size, 3K. I'm like, number one, this person is not in risk management. This person is trading in a very risky way. How can I use 50 lots and I'll be getting 3K? It's not possible. How can I be using 10 lot size and I'm getting $500? It's not possible. All of those things are lies. They are not following risk management. You get the idea. So you then, because you see all of those things, then all of a sudden they are trying to pay for their mentorship. These guys are bit trade. Let them show me chart analysis. Let me see what they are saying. I'm not swayed by their money or by their results. The results I want to see is your analysis. I want to see what you analyze that allowed you get this thing. I think they will even sell more if I'm giving them a strategy like this now. Number 5, Jare. If you don't like me, I'm sorry, but I promise you boot camp is going to be interesting. And it's interesting. Number 5. All right, number 5, I said wishing for money mind. Okay, sorry. Wishing for money, their mind has not grown into. I like this one very well. Wishing for money, their mind has not grown into. Classic example, you want to load $50 and turn that $50 into 10,000 US dollar in 1 week. Is it possible? Yes. But has your mind grown into it? In fact, the reason why some people will never, and yes, if you're hungry, don't be offended. Yeah. The reason why some people will never grow their accounts to $500 is because $500 is too much for their mind. They will, once you just start misbehaving. Once you are on $200, you just start misbehaving. So they wish for money that they have not grown, that their mind has not grown into. And I've said this a whole lot of time. If you give a small baby, let's say a primary 4 student, #1 billion. You see, the best thing that primary 4 student knows to do with #1 billion is to buy biscuit and sweets and Chicken Republic and KFC and Kilimanjaro, and I mean that's the best. If you just use the money, he will squander it because he has not grown to that level. So instead of you to be patient and forgive my bias, Bible says that Abraham, lift up your heads, for as far as your eyes can see, that have I given unto you. Now, how far has your eyes seen? Are you sure your eyes have seen $500? Are you sure? Are you sure your mind has seen 10,000? Do you know what 10K is? Do you know what 10K is? Because the idea is, the reason why you even want to make the 10K, and how much is 10K? 10K is about 7 million naira, right? The reason why you want the 7 million is because you want to buy a car, you want to buy good clothes, you just want to show to others that you are not failing in life or you are not failing in Forex. That's best what you know to do with money. And if you really have read a lot of books on money and you have really studied about money, you know that money does not come to those kinds of people. In the pre-boot camp, remember the last key, the triple M, make money, manage money, and multiply money. A lot of people don't know how to multiply money. They just know how to squander money. And money will not come to people like that. It's impossible. It's the truth. And the fact that I'm going to post this thing on YouTube is giving me issues because people will now start calling me out. And I don't have strength for Wala. So let me throttle down a little bit. Stop wishing for money your mind has not grown into. Full stop. Number 6. Should I stop at number 6 or at number 5 and then we do the remaining 5 tomorrow? Should we do that? Should we do that? Anybody talking on the group? Should we do that? All right, since nobody is answering me, let me fire. Let me fire. Number 6. Number 6. I like number 6. Planning on money that hasn't, or let's use has not come. Yeah, planning on money that has not come. A lot of traders do this. Planning on money that has not come. You know, I mean, this is, remember Proverbs says that hope deferred makes the heart weak. It's a principle. So you start planning on, you start, I mean, you see, the reason why I'm saying it is not because I'm trying to, you remember, we're talking to ourselves. These things are from experience, honestly. These things are from experience. I don't rest my life because I was not going forward. I mean, I was not going forward. So I was saying, okay, how much iPhone 15 is about to come out? How much is iPhone 15? iPhone 15 is, let's say, 2,000 US dollars. 2,000 US dollars. I'll trade next week. I'll buy it next week. I'll buy it next week. And this person's account balance is like $20. That means that person is planning to flip $20 to 2,000 US dollars in the next 1 week. And when it does not come, because that person is then going to end up blowing that account, that person then start getting sad. And then they will now start saying, I mean, village people are after me. I mean, let village people rest for a while. Take responsibilities for your own actions. Take responsibilities for once. Stop pushing the responsibility and the blame to your village people. Let them rest. My spiritual father used to say something. He will tell you that even the devil used to get profits he did not trophies he did not plan for. All of a sudden they'll say it's the work of the devil. And devil is in hell saying, his demons are there saying, sir, they have brought another trophy. And he's like, which one is this one? This person said you have done this. And then the devil himself is surprised. He's like, when did I do this? Hey, I know nothing about this. But, well, it's my trophy, so still bring it. But I still know nothing about it. You get the idea. I know it's funny, but take responsibility. Stop pushing the responsibility to village people. And because I'm saying that you should take responsibility, does not mean you should be depressed. It should be a motivation for you to push yourself to do better, not to get depressed. I mean, I even really wonder why people used to get depressed in this life. Trust me, I have a strategy. If you are depressed, I know what to do to kill depression. Don't go and buy pomo. All these Yoruba pomo dudu, the one that is round, that ata is inside. Trust me, don't buy like 5. Depression will run away. It's because you have not eaten, that's why you are depressed. Don't eat and rest, please. Most of what people call depression is not depression. That's why the way. Planning on money that has not come. Let the money come first before you start planning. Don't promise. And they used to do these things a lot in mentorship. I used to get it a lot. Some people will say, okay, sir, let me pay this amount. And then when I start trading, I'll pay up this. I'll just be like, see, just pay. How much do you want? Just pay that amount and rest. Don't promise me, because I know you end up not getting it. You get the idea. Stop planning on money that has not come. Let the money come first before you start planning. You get, let the money come first. I know you are trying to push your faith. You're a man of faith. I get. Man of faith, calm down. Let the money come first before you start planning. You understand? Number 7 now. Number 7. What did I write? Number 7. Number 7. I wrote here, trading always. Some people used to trade while they are sleeping. I wonder how they do it. I really wonder how they do it. They trade always. They don't rest. They don't rest. Like, they don't rest their mind. I think it was Abilia that was saying it on Sunday. And he said that trading is draining, is mentally draining. Trust me, it's mentally draining. People trade always, always. Asia, you are there. New York, you are there. London, you are there. Tokyo, you are there. Nigeria, you are there. Guy, rest now. Guy, rest. Rest your life. Stop trading always. Stop trading always. Your life is not about trading alone. Yes, I know you have a lot of things to do with money. Coach, it's because you don't understand what I'm facing right now. Yes, I know I don't understand what you're facing right now. That's not a lie. But rest. 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 Like, take out time to rest. Stop trading always. I know they talked about meditating. Yes. Meditate, don't trade. Like, always on MT4, always on MT5, you are taking a trade. Let it go up. Hey, it's already coming down. And you remember that even if you are looking at your MT5 every time, it's not going to make it go more bearish or bullish. You remember that saying, right? I mean, rest. Just take out time. How many trades are you going to take in a day? After you are done. Close MT5. Go and do other things with your life. Your life is not centered around trading alone. I mean, you have wife and children. If you don't have wife and children, you have parents. If you don't have parents, you have friends. If you don't have friends, you have siblings. You can't tell me you are alone. You can't tell me that's the only thing you have to do. There are books to read. There are sermons to listen to you if you're a Christian. There's your mind to develop. I mean, there are a whole lot of things to do. Not only trading. Stop trading every time. Stop trading every day. I mean, don't rest. I mean, that's just the word. Don't rest. Take out time to rest, please. Rest. 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 I know we used to say put in the hard work. Like burn the midnight candle. Sometimes sleep. And sleeping is very spiritual. Sleep. God gives his beloved sleep. You are the beloved of God. Sleep. My God. Number 8. I wrote here failure to backtest regularly. Spell regularly again. Did I get it right? Yes, I think it's the backtest I got wrong. Yeah, failure to backtest regularly. Now, let me start from this note or this point. Now, after the boot camp now, remember that there is live trading call on Monday, right? Now, a lot of people just want to start utilizing it, not going back to test the consistency in what they have learned. That's one. And permit me for using the scripture again, or Bible again if you're a Muslim. I'm so sorry. Now, remember the Berean Christians, they say that when they teach them something, they go back to check. They go back to check how true or how consistent what they've been taught is. Trying to use that same analogy. Forgive me if you're a pastor and I'm using it wrong. I'm sorry. Forgive me. The people don't go back to backtest what they have learned. For instance, now, this week now, from Mondays to Friday, trust me, I'm going to go back. I know I played in all of it, but I want to go back to see why did the market start selling from here? Why? Remember that Avilia was saying on Sunday that he knows of a person that he backtested EU from when EU started. Man, that was a challenge to me. That was a challenge. Over the week, I and Fort, we got talking, and Fort said he wanted to do a 5-year back test on EU and GU. So let's go back 5 years. Let's see how these things have been playing out. And it is this back testing that brings, number one, confidence in trading. A lot of people don't back test. They just want to go into the market and start trading their way out. Go back. I know you are not using a paid trading view. Since I've been trading all my life, you'll be surprised. I've never paid for trading view one day before. I've never in my life paid for trading view before. If I want to start my probably 5 years back test now, I know I'll need to pay. Yes, I'll pay. But with what you have, utilize it. You are not the first person to not have paid trading view. With what you have, utilize it. Utilize it. Like back test, consistent, regularly. I mean, set out a day. I think the highest I've done in back testing is like, how many hours have I done? But don't let me see how many hours, so that some people will not start feeling intimidated and all of that. But I've done a whole lot of hours of back testing. If I'm going to start trading, let's say, I think of recent, I started trading USD JPY. Now, before I started trading USD JPY, I didn't start by, guy, I did like, I went back to see how this guy used to move. Before you now start seeing, I know you are seeing that, this guy knows how to trade. It's result of a lot of back testing to see how USD JPY, what the character is. You get what I'm trying to say? Back test regularly. Back test regularly. Back test regularly. So that I don't waste so much time. I've spent almost an hour now. And I want this to be done. Number 9. Getting into wrong mentorship. Now, people get into mentorship that they have not thoroughly vetted. All right, I think some people are saying something on the group. Let me read up a bit. Okay, so nothing yet. All right. Someone said I was born to trade. All right, so no question yet. All right, now people get into mentorship that they've not vetted. They've not vetted the mentorship. I've been a victim of a lot of wrong mentorship. Paid money for many things that the one that even paid me most, the one that paid me most was the person who said I should pay for an indicator, and between, I think, July that year, it was July to December, we're going to do a 100K to 10K. So I was thinking maybe the guy was going to be the one calling the trade. So I was going to load my account with $100. Then I was going to pay for the mentorship. I was going to pay for the mentorship for, I think, about 50,000 naira. And I was going to pay for the indicator, I think, about 30,000 naira, thereabouts. Can't really remember how much I paid as at that point in time. I'm sharing my story now. The guy did not call one trade like this. The $100, I lost it. The indicator, it did not work. And the guy did not even come back to say, I'm sorry, the indicator did not work. This one or that one, man, it was painful. And then I entered, I thought of this robot trading. I got an EA. The EA was working fine on on demo accounts, of course. Robots always work well on demo accounts because it's not real money. So you can handle the drawdown because they are not losing a lot of money. And the money on demo accounts is much. And then I tried to put the EA on a real account. And then I lost the money. And then I went to complain to the guy. And then the guy was like, that he has been facing a whole lot of problems, that they hacked his robot and yeah, maybe a foreign guy hacked his robot and his robot has been misbehaving, that was going to sue the guy, the white guy, that is going to give me another robot. Then he said there was one robot that he doesn't, that is a whole lot expensive, but because this robot is not good, again, that he was going to give me that one as compensation, but the robot only works on gold. Nigga, that shit did not work. I'm not, I did not even make my capital back. That's the talk of. And that was, now, who is to be blamed? Am I to blame the guy? Of course, I will not blame the guy. I should not. Because I didn't get all of their mentorship well. I didn't see I didn't see their results or their ideas. And I believe you get what I'm trying to say. I didn't see all of those things they do. I just wanted to make money. Honestly, I just wanted to make money. That's like to date. If you still tell me about robot trading to date, I'm not interested. Tell me it is worth 10 million naira. I don't want. I'm not. I'm okay with my SMC and ICT, please. Don't scatter my life for me. Sufficient is the evil of the day thereof already. Please, every mala to his kettle. I'm okay with my kettle, please. So they don't vet the mentorship they go into. They don't. They don't go into, they don't do background check. Because you see the guy is driving a Benz, is driving a Range, is shaking hands with a whole lot of white guys. And I hope you know it's easy to shake hands with white guys. Just go to ShopRite. If you see any white guy there, tell your friend to snap both of you picture. It's easy. I mean, those things are easy. You get. So a lot of people don't do all of those kinds of things. They don't vet, they don't do background check on how consistent this guy is. Is he really what he says he is? Is he really what he says he is? Do you understand? So before you get into any mentorship, make sure you vet that person. Make sure you vet that person. Is this person really what he says he is? Do you understand? And then the last and the final one, so that we can get into, I know this one, everybody's body has been itching. Let's just go into the chat. We'll go into the chat. Okay, let me say, failure to celebrate themselves. They don't celebrate themselves. I think it was 2 weeks ago or 3 weeks ago. Someone messaged me and he sent me, I think it was a voice note or a chat, I can't remember now. But he said that one time I said, believe in yourself that you are good. That I just believe you are good. And he said that was what he held on to. And he has been doing very well. He cleared his perfect challenge. He's trading a live account right now. He's doing very good. And that was just because, just believe in yourself. Celebrate yourself. Yes, you are not making the money yet, but celebrate yourself that you are at least getting the strategy. You are learning the strategy. Celebrate yourself a whole lot. I mean, your account is on $10 or $20. You have flipped it to $50. Withdraw $10. Go and eat. Celebrate yourself. Spend Forex money. Forex money is made to be spent. Please, don't, like they used to say, stop seeing a bag of cement in every money you make. I mean, celebrate yourself. Celebrate yourself a whole lot. It's not going to bite. Not going to bite. Yeah, I know you want to be hard on yourself. You want to be diligent and you want to be all of those kinds of things, but please celebrate yourself. Can everybody see my 1 to 10? I think from my Telegram stuff, I'm seeing just 1 to 3. Does everybody see my 1 to 10? Or is my laptop? Yeah, you can see everything, right?
You can see everything.
All right. Thank you for the feedback. All right, so 10. Now that's the 10 I've seen. I've noticed. So guys, Wow, we are 113 on the call. Oh my God. I'm so grateful everybody joined. I'm so grateful. Wow, it means a whole lot to me. It means a whole lot to me. All right, so let's do a roll call a bit. Let me see how many people on the call. And this guy,
Coach, we can't hear you.
can you guys hear me now?
Yes, sir, we can hear now.
All right, I'm sorry. Sorry about that. I didn't know I messed with the mic. What's going on? Why did that thing disappear? Can you guys see my screen?
Yes, sir.
Well, I don't know why that thing disappeared, but let me just continue my drawing. And then in a bearish trend, we have series of lower highs and lower lows. Lower highs and lower lows. Lower highs and lower lows. All right. All right. And then we are quite aware that this is fractal. Okay, before we even get to the fractal, we are aware that at every higher high, we call it what? An external liquidity. At every higher high, we call it external liquidity. And then at every lower low, we know it is what? External liquidity. External liquidity. And then we are aware that our internal liquidity is at what? 50% and what? Below. 50% and below in bullish conditions. Let's put this down a little bit. 50% and below. All right. And in a bearish structure, it is what? 50% and what? And above. Internal liquidity. 50% and above. internal liquidity. All right. And then we are all aware, all right, that below on this right side, we are always looking for our plays. And our plays are usually what? Our institutional candles, our imbalance, our order block, our breaker block, anything at all. We know this is where we are going to find them. We know this is where we are going to find them. All right. We are looking at our imbalance, which is where we want to be taking our trades from. Which is where we want to be taking our trades from. Just be patient with me. Allow me to do my magic. Allow me to do my magic. All right. All right. Man. Okay. Now, a lot of people find it hard in spotting institutional candles. They're always like, where is the institutional candle? Which candle is the institutional candle? You see, don't disturb yourself. Once you can identify your structure points, which is your higher highs and your higher lows, right? I've told you to just do what? Look to the left of this place. You will surely see your institutional candle. And then there's other questions like the institutional candle. Is it one candle? Is it the last down candle? Is it the... Now, institutional candle can either be the last one candle or series of what? Or series of candle because of time frame. It is time frame dependent. Remember, a 4-hour candle, one candle on the 4 hours, right, can be how many candles on the 1 hour? Or will be how many candles on the 1 hour? Will be one candle, will be 4 candles rather on the 1 hour. 4 candles on 1 hour. Ignore my writing. I'm not with the pencil yet. All right. So that's very easy. Spotting your institutional candle is very, very easy. All right. Now, this is where it all gets trickish. In that, now, every time frame is dependent of itself. And this is like setting a template for tomorrow, because tomorrow we are going to be going into that's the order flow and all of that. But tonight, I want you to really understand how structure is being formed and certain things. Now, if this is a 4-hour structure, right? You then know that price is going to do what? Create series of what? I know some people know it already. If you know it, let others learn, all right? Series of higher highs and higher lows. Series of higher highs and higher lows. Series of higher highs and higher lows. And then when price is ready to reverse, then breaks the structure at that point and then start creating series of lower highs and lower lows. Start creating series of lower highs and lower lows. That means if this is a 4-hour chart, if this leg is a 4-hour chart, then we can identify that we pull, oh no. I want to move this out. Then we can identify that this will be probably, let's say, our 30 minutes or a 1 minute or a 1 hour chart. All right. This can be a 30 minutes or a 1 hour chart, whereby price is going to be creating multiple structures like this. Now, we all know that all of these lows here, right? If you have to bring out your Fibonacci from this low to this high, right? You should then know that all of these lows are what? Call it dynamic liquidity, call it short-term lows, call it sell stops, call it whatsoever you want to call it. But the summary of it all is what? It is what? Liquidity. All of these are liquidity. Now, the thing is, you don't know which one exactly are they going to stop at. Are they going to stop at the 618? Are they going to stop at the 786? Are they going to stop at the 88.6 or the 99? Or they are going to even generally break the structure? You really don't know. You really can't say. But what you should always speak out is what? This is what? Internal liquidity, which is what forms your internal liquidity, and which is why we used to say that at least they should take internal liquidity to 50% and below in bullish condition and the opposite in bearish conditions, right? Yes. Now that you've understood that. Now, if we are to magnify this particular place, which is where I really want everybody to know how to not get liquidated. How to not get liquidated. Price usually does, or price normally do or does. Even the two itself is correct, sounds incorrect. Whatsoever it is. Who is messaging me? Message. Sorry, hold on, guys. No. All right. So now, prices usually do something like this. Have you seen this kind of structure before and you don't know which one to play? So price do something like this. Create the high, create a low, create this like this, and then do something like this. And then do something like this before going off. I'm pretty sure a lot of people have seen this before. Right? Now, you might want to be seeing, you might see an imbalance here and you want to play. Only for you to see that you were liquidated. Only for you to see that you were liquidated. Now, remember that. Remember that. What did I say now? Oh, why is this person distracting me like this? All right. Now, why would you? The question now is, we both know that you shouldn't play this range. Why? Because it is internal liquidity. Sorry, hold on, guys. Because it's internal liquidity, because this is the low and the high. This is internal liquidity. I remember that I said the reason why I'm even in this thing, I remember what I wanted to say is because there are a lot of things that people used to say out there that people pay for. Now, this is that thing they used to call inducement. This very low here. This low here is the inducement. Why is that this thing? So that's where you now start saying IDM, inducement, right? So they are trying to induce traders. And this usually, how to identify this is, it is usually between a structure. This is the main structure. This is the main structure, this low and this high. Now, when you see an internal structure being formed, know that the low of that internal structure is what we call what? Inducement. Now, quick example. Let's look for it. That was what I was saying while we're on the chart. Where was the thing I wanted to show? Okay, yeah, this low here. This low here. Now, if you have to look at this structure, if you have to look at this price structure, where is the main structure? We had this what? We had this low, and then we had this what? This high, right? And yes, there was a major structure point here. There was a major structure here because, of course, this was the last low that I can identify here, right? And then there was this internal structure as it's where this high, this low, this high, this low. Now, you should know that this is the inducement. This is that idea I was talking about. And that was the reason why they came to sweep it today. Price will always come to sweep the inducement. And it's scattered all over the chart. Scattered all over the chart. It's usually in that internal structure. So that I can paint this well. This is the inducement. So either you call it inducement, either you call it a short-term low, either you call it a short-time high, either just know what it is. It is not necessary you. So you get the idea. Let's look for other ones. Let's start looking for structure. Now, if you have to look at this structure here, if you look at this low, you know that this is the low and this is the high, right? And then price created this structure. Why will you not play this structure here? Of course, because this is an imbalance here. The reason why you not play this structure is because of these lows here. You should already see that this is what? An inducement. Price definitely will sweep that low. All right, that's another one. Let's look for another one. Let's look for another structure point. And of course, remember I said it's just trying to trash out most of those things people used to do online. Now, all of this one here is what? Of course, you should know that all of these are internal liquidity, right? Because this was the last high, and then we created this low. This is not an higher high. This was the last higher high we can see here. And then after we created a higher high, price came to create that higher low, all right? And then after creating that higher low, which one was higher? Price then created this higher high. Now, all the thing inside becomes what? All of this is the what? The inducement. All of this. All of this is the inducement. Don't worry. I will shrink this chart so that you can see how price was navigating all through. All right. I think Monday was even beautiful. I think I like the way Monday was. Say Monday now. I don't want to do all of that. But let me shrink the charts now so that you can see it from Monday. Now looking at structure, price always has a story to tell, right? Let's do something. Let's do something. All right, I think it's a bit clean now. Everybody can see the charts properly. Now look at this. In fact, let's go to the 1 hour. Let's go to the 1 hour. And let's start marking. Let me hide this a little bit. Now we had this high. We had this low, right? We had this lower high, and then we had this lower low. Price then started moving sideways, and because it's moving sideways necessarily does not mean there's no play for you there. Let's go to like a 30 minutes to see this thing clearly. Now it was sure, I was quite certain they were going to sweep these highs. I don't know. Are you guys getting what I'm trying to say? The inducement and all of that. Guys, yeah. How many are we on the call? The 110. Wow. Man. Yeah. All right. Thank you. So it's usually something like this. It's usually like this. You get this structure. So this are inducement. All right. Let me go to another chart. Go to say, let's go to USD JPY. Let's see where's the JPY. Let me see. Let me look for it. I didn't come with let's say something that is picture perfect. So because I want you to see it, I want us to look at it together. So we have to look at this high, price created this low, right? No. Price did this high, this low, right? Created this. Or am I even saying this thing well, safe? Interest. If I gotta do something that I'm confused about. Because I know this is an inducement, which was why they had to sweep the high, right? Just to throw traders off guard, came into this week, kind of. We got to look at the structure. Let's mark out the structure so that it is easy. So we had this low, we had this high. Now this is not a lower low. Remember, that's not a lower low. Neither is this. Sorry, this is not an higher low. This is not an higher high. And then they broke this structure here. So this now becomes the new range. So anything between this high, this low rather, and this high becomes what? Your inducement or your internal liquidity, whatsoever you want to call it. All right. And then you can see our price. If you are taking your trade here and you put your stops here, then you start blaming village people. Now you see the reason why you shouldn't blame village people, because you should know that this is going to be a stop on. The stop should have been there. All right. That was why they came for that, and then they created a new lower low. Now that they created a new lower low, right? This becomes the new lower low. Now where is the higher high? This becomes the higher high. This is the higher high. Which then means that what? This is what? So there's high probability they are going to continue bullish. They are going to do what? They were going to continue bullish. They were meant to like sweep the high and then continue. But they have created series of more lower lows. So they've created this. So this structure has changed already to bullish structure. That's what I'm trying to say. All right. Well, let's look for another one that is more clear. I mean, this used to happen a whole lot on 3 to 5 minutes. I just want to show you it a more higher time frame. This goes above, yeah, close that. This is 30 minutes. Just be patient with me so that we can all right. I think I've seen one here. I knew there was one there. So we got to look at this structure. We had this low, right? We had this high, we had this low, right? This is not what? A structure point. Am I correct? Yes, I think I'm correct. I think I am. So the break of structure this is not the break of structure, I think. Yeah, that's not the break of structure. So this is the break of structure. This low here. I mean, the low used to stand out. So you were so sure you were going to come to this low. And then they swept that low, and then that was your trade. All right? That's another one. So again, what happened in this place? But let's draw it out with this. We had this low, this high, this. Am I correct? Slower low, yeah. And then they went like this before breaking that structure. Yeah, I think I got what I want. So if you bring this out, right, you see this low, then this high, then this lower low, and then they went on to do what? To break structure. This low becomes your what? Your inducement. You get the trick. So don't get swayed by inducement strategy and all. We are just trying to tell you internal liquidity. Let's look for another one. All right, let me see what happened here. Let me see if there was inducements in this place. Okay, I think I'm looking for a lot of bullish. Let's look for bearish instead then. Let's look for bearish inducement. But then this guy has been bearish for a long time. Has been bullish rather for a long time. I hope you guys can hear me clearly. Hope I'm not too low. Let's look at J. Let's see if we can see on J. And probably let's go to 5 minutes so that I can spot it fast. Okay, let's look at this place. All right. For whatsoever reason, I don't know why they didn't sweep this high, because this was like an inducement to me. But yeah, I think they even did. So here we had this. We had this low. We had this high. We had this break of structure to the downside. Okay, yeah, I think I see this one already. And then we had this reaccumulation. We had this, yeah. No, I'm not saying this clearly. Who is closing it like this? Trying to look for bearish one that is clean and perfect. Okay. Okay. Someone is saying something. All right, I'm coming. I'll get to your question. Don't worry, we'll get to questions shortly. All right, we'll get to questions. But I'll try to look for more examples. Trying to look for more clear example. Most of the ones I'm seeing, which asset has been bearish for a long time? I think S&P has been bearish. Feel. I'm looking for an asset that has been crazy bearish. You can see this one here. This is the inducement here as it were. You can see the inducement. I think this one is even clearer. So you had this low, you had this high. All right, the price did this, and then went on ahead to break structure. All right, so if you have to bring this out, let's see, you have to bring this out. This becomes the inducement because this was the low, this was the high. This one was not that structure. This is the inducement, so they have to sweep that high. They have to sweep that high, in which you see here that they swept this high. They swept this high before dumping. So if you had taken your trade here and your stops was here, and your stops was there, you can see how they took out your stops. And this is where you call village people, which is not village people. It's actually an internal liquidity that was made to be swept. Let's look for another one. I'm looking for bearish inducement. That was clear. Let's see here. coming. Let's check something out. Okay, so they took that I came into this other block. But then I don't like that one. That one is not clear enough for me. Let's see this place. Yeah, you can see how they did it here. This low, this high, this low, this break, then this one here. So more to say that if you are looking for it, it might be one candle, but you'll be more correct if you can see two candles here. I know sometimes it might call this that what's it called now? Smart money cube. Yeah, you'll be correct, but just be careful about the lows. Probably you can just put your stops below the low to be safer. But yeah, you can see how they swept this low before going up. So that was the inducement. Swept that low. Let's look for another one. Okay, I think I see one here now, but this is out of time. This is out of time. There was no timing in this one, but same thing. We had this low, we had this high. They broke that structure as it were, created this internal range, expanded, but still they came back to sweep these highs here. And the reason will be probably on the 15 minutes. So you have to look at it on the 15 minutes. You see that we had this low, we had this high, and then we went on to do what? To break that structure. See that this was not the break of structure. This was the break of structure. And then before breaking that structure, let me do that again. So we had this low, we had this high. All right, they created these structure points here. Then they went down to break that structure. And then they came here for the inducement, and then they continued bearish. All right. Oh no. Why did I do like this? So if you had to bring this out and see that this was the break of structure, where's that brush now? This was not the break of structure. This was actually inside. This was the inducement. This was the sweep. So they came to sweep this. Yeah. You get. So I was saying something. Okay. Someone saying something. Okay. I think I can continue. So you get the idea. So let's go back to the drawing board, and then now that I've gotten that inducement out of the way, let's go to the next thing we have to do. Where's my drawing board again? All right, this is my drawing board. All right, back to my drawing board. All right, so remember we said that this is a 4-hour chart, right? And on the 1 hour, you're going to be getting all of this multiple series of lower highs, lower lows, lower highs, higher highs, higher lows, higher highs, higher lows. And you are not going to be taking any retracements until you see. In fact, in recent time, I've observed this, and I don't know how many of you have also observed it, that if price creates this kind of a structure, let's say they didn't come to the 50% and they created a new higher high, right? They usually come to sweep this low. I'll show you. I saw an example in recent time. I'll show you. They usually come to sweep this low, which is the reason why your retracement must be at least 50%. It must be 50%. If it is not 50%, I feel you should consider it as internal liquidity before creating an higher high. And that example I saw was on gold. I've been trying to look at gold in recent time. If you look at gold, all right, if you have to look at gold, if you mark out the structure on gold, right, you had this low, you had this high, right? Price created this low and then created this high. But if you have to measure with your fib from this low to this high, I think they even got to the 50%. Yeah, they did actually. They actually did. But most of the time, I've seen them, they don't used to get to the 50% before reversing. And if you have to look at this on the daily time frame, right? You have to mark out the structure on the daily time frame. Look at this. If you can even spot this, you can spot the inducement on this, right? So let's see. We have this higher high, this higher low, right? This higher high, then this higher low, then this higher high. All right. Yeah, I'm trying to look at the reason why they swept this low, this very low. Because if you have to look at that, that's another higher low. Okay, I think I see it now. Hold on. Let's measure. So because this was the last higher low to this higher high, they still got to the 50% though. I don't know why. Well, I wasn't satisfied. It's not like I trade gold. I don't even like gold. But I'm really not satisfied when I don't see price do a little bit of retracement because they were leaving a whole lot of imbalance. They left this. So why just get to this one here and then start shooting up? Because this to me seems to be like, I don't know, I don't like it. You get the idea. But most of the time, for me personally, I usually avoid liquidity. I usually avoid range that if this retracement, right? If this retracement does not get to the 50%, I usually avoid it. I normally just see price coming to take that low and then continue. That's most of the time, that's where we used to get this thing that used to happen. When lower time frame structure used to do this, that they sweep the low and then they continue. And you're like, why did they sweep the low? I feel most of the time is usually when price does not get to the 50%. You understand? And you can check your chart. You can really backtest it. So do you get the idea of inducements now? The psychology behind price. Price, whatsoever you want to get, the psychology I'm trying to say is that price usually creates series of lower highs and lower lows in the market and series of higher highs and higher lows in the market. Price will forever keep on creating that. And then the inducement concept comes in when price created an internal structure before creating a new structure point. New structure points meaning a new higher high or a new lower low. So again, in clear, simple terms, again, it is when price does this, creates this high, creates this low, and does something like this, and then creates this high. All right, you should be careful with anything. We should be careful with this. This usually is an inducement in price. All right, so you should be looking at price sweeping this low, and then you can get something like this, and then all of that. Don't worry, we'll talk about entries tomorrow. How to enter the trades, what time frame concept. Well, I want you to understand this first. How price moves. So let's do a thorough check. Let's do a back test on EU and see how consistent EU has been on this. So let's do 5 minutes. Let's do Monday to Friday. Let's see how it's played out. Where's Monday? This Monday. All right, so on Monday, let's see. So remember, what we are looking for strictly is what? Inducement. In fact, let's use 3 minutes. We are strictly looking for what? Inducement. What's Monday? This Friday. All right, this Monday. Yeah. So let's see. Now, looking at this range, if you have to look at this structure, this main structure here, right? You can see that this is like the low and this is like the high, right? Anything inside becomes your inducement. So you can see how they came. It swept this low, right? After doing that, then the price closed above. Yeah, I think this closed above. Yeah, low, high. So where's the new lower low? Sorry, where's the new higher low? This is the new higher low. I hope I'm not confusing people because I feel people are not following me. I'm feeling people are not following me. And then that's the high.
We are following you.
Alright, and then they swept this. So after creating this high, now I'm trying to get the main structure. We are going to go deeper into it, right? After creating that main structure, right? This is the new high. This is the new low. Which low created this high? Which low created this high here? Is it this one or this one? Which one are you going to call your lower low? If this is the lower low and the lower high, let's even see. Is this the new low, this one or this one? Which one? Let me see if people are really following me. Are they talking on the group? Nobody is talking. Which one is the new low? Illegals fire. Okay, probably maybe I should put a paint on it. Is it the red or the blue? Which one is the new low? The red or the blue? The red or the blue?
The red is the new low.
Alright, the red is the new low. Alright, so within this low, then we went to create a new higher high. A new higher high. Alright, so this becomes some mic is on you. Some mic is on you. Alright, thank you. So this becomes your inducement, right? You can see that this low becomes your inducement. Now, if you were day trading, let's start looking for how you are going to be avoiding your inducement. Remember, that's the main structure. Now, let's look at structure within structure. So on Monday, I think they started up above here. Let's see, above. All right. So was it here? Just created this low, this high, this low, this high. We broke structure, and then we came here. Look at that. Feel it's even there self. See that? See how they swept that high. Remember, liquidity is the name of the game. In fact, let me be doing it like that as I'm saying it. Remember, liquidity is the name of the game. So they took that low, and then immediately they did what? Bam. And then created a new structure. So they created this not the low. This is not a new low, meaning there's high probability they come to this high rather, right? And then let's see, the day comes to that place. Well, price was not bearish. It just kept on dropping. All right, so New York came in. They created this low, they created this high. So this was the new low on higher time frame, this low, and then this high, right? Price then created this structure in between, kind of. And then this was where I said I loved what they did here, which was what even informed my trade idea for that day. So they swept these highs. You can see how they swept that high. So I saw that they have taken liquidity, and after they took that liquidity, what did they do? It broke structure to the downside. It broke structure to the downside. All right, which was enough for me to take a trade. Market structure shift, which was enough for me. And then they even came again to take these highs. But my trade idea, my entry was probably at this place, and my stops was at these highs. Because I don't know which one they want to come for. But my stops was at this high. They're aggressive. All right, and then this continued dropping, they continue dropping, they continue dropping, they continue dropping. All right, look at this one here. Before they dropped, look at what they did. They swept these highs. Swept these highs. Go and check all of it. All of it. Before they drop, they usually sweep liquidity before dropping or before shifting to the upside. They usually, before any aggressive push at all. Look at this one. Before this aggressive push to the downside, what can you see? They swept this high and then they dropped. So that was for Monday. Let's look at Tuesday. Tuesday is where my focus kind of is at. What am I looking for on Tuesday again? All right, this is Tuesday. This is Tuesday. So Tuesday, I think there was no trade on Tuesday. Was there a trade on Tuesday? I don't think I catch the trade on Tuesday. Well, looking at this sell, look at this sell. We had this low, we had this high, we had this lower, higher low, right? We had this higher high, and before price broke structure to the downside, look at this high is here. You see this high is there. Sugar high dropped. Makes sense, right? Makes sense. Yes, it does make sense a whole lot. So I feel I've done enough already. This 12 already. I've tried to. Question. Let's get question rolling as I keep looking at these things. Can your question start rolling in? Okay. Question, please. Okay. Are you saying this? Look at this. On this broker, it just stayed like this. And on this broker, it gapped down already. Let's see G. Okay, that's one broker. Okay, I think G is pretty much steady. But let's see DXY. So DXY is pretty much all right. So question, guys. Let's take 2 questions. How can you set your trading view to be black? I don't think I followed that question. All right, let me quickly go to this question. I like the fact that some people were confused in this place. I like the fact. So let's clarify this. Some people said it was the blue, some people said it was the red. Well, the correct answer is the red. If you have to look at this, right? Look at this. We had this low, we had this high. This is the candle that created the higher high. This low formed before the higher high. All right. This low formed before the higher high. And we need the higher high to form first before looking for an higher low. So that's the reason why this is not an higher low. This is just, in fact, this is an inducement to me. And this is one of the reasons why I really wanted them to take this low today. But they did not. It's all good, but you get the idea. All right. Yes, the class is being recorded. All right. If the retracement doesn't come into 50% or above, say in a bearish trend, but makes a new lower low, you still consider it inducement? Yeah, I think I explained that already. How do you know an inducement in a structure? Sometimes it prints like a break of structure. Please, coach, can you explain from the higher time frame? All right. Does this work on synthetic? Well, I feel it does. I've seen it work before, but I usually don't trade synthetic, so I can't say for a certainty, but I feel it does. All right. If you've been on my call for a while, remember that I used to say if you want to confirm a break of structure, you should go to one time frame ahead. All right. You just want to be very sure. Now, this is a break of structure here. Let me be using this brush. This is a break of structure. All right. Now, if price did not go this aggressive to the upside, all right, I want to confirm if it's a break of structure. Just go to the 30 minutes to see if the candle close above. And remember that the break of structure is what? Is usually the body of the candle, not the wick. It's usually the body. So you want to see the other candle close above it, not the wick of the candle. It's usually the body. Let's look for one. Let me look for one. Okay, if you have to look at this range here, this place on a 3 minutes or a 5 minutes, you actually see that this candle here, on this place, this is not a break of structure, right? This is the candle that broke that structure, this other push up. But if you have to look at this on a 5 minutes, you discover that this candle actually closed above. So for you to just be very sure, just go to a time frame ahead. Is it here? This is what I'm trying to say. All right. So you can see. Now, this closed above. Now, if you just want to be very sure, all you need to do is what? Go to one time frame above. If the bodies of the candles actually closed above, you can see that now. In fact, the break of structure for me on this trade is here. This is the low. In fact, it's here, sir. I low break. So this candle broke that structure for me. But some people, they prefer that other one. You get. So one thing I used to advise, if you want to confirm a break of structure, just go to one time frame ahead, one time frame higher. So when there is structure within structure, which is considered to be the inducement or liquidity, it must relocate imbalance below it or above it. Well, sometimes you might not see an imbalance. You're not going to see an imbalance every day on your chart or an order block every time on your chart. What's going on? You're not going to see an imbalance every time or another block or an institutional candle. For instance, let's look at this. Where's that my Monday trade again? Where's my Monday trade again? This Thursday, this Tuesday, where's Monday? Thursday. This Monday, right? It's Monday. All right. I think this should be it. Okay. Now, this is it here. This trade here, this was the place I said I played. I played this because of the imbalance, and my stops was above this high here. Now, normally there was a whole lot of liquidity here, but really there was no institutional candle. Another block is the same thing as an institutional candle. It's usually the last up or down candle or last series of up or down candle. For instance, where is it now? For instance, if you have to look at this now, you have to look at this series of candle for me is the other block. This series of candle is an institutional candle. Either you call it an institutional candle or another block, whatsoever it is. So this is it for me. This is an order block for me. All right. I know some people might want to take it as this is the order block. This last down candle here is the order block. For me, no. It is those series of candles. This is the candle that did the manipulation. In fact, some people will even take it from the week. Think if you are to go to like, okay, take that one even weeks down. Let's say 1 hour. You can see that even on the 1 hour. So look at that series of candles. So if you have to mark it out on this time frame, you can mark out this one. But for me, because I trade mostly, I like trading or taking my trades on 15 minutes. I look at this as the institutional candle. And I think that was even why I didn't take this trade, because I was really wanting them to come into this imbalance here. You get the idea. That's an order block. Another example of an order block for me, let's look for another order block here. I mean, it's scattered around. This is an I saw one now. All right, for me, this is an order block. This candle is an order block to me, or an institutional candle. That particular candle. This particular candle is an order block for me. And if you are to look at it, you can see how price came into that candle there on Thursday, which was, I think a lot of people took this sell. And see, came into that imbalance that was coinciding with our order block. You get the idea. For me, it's usually just the last up candle or the last down candle, or series of up candles or down candles. All right. Yeah, it's pretty easy to spot. All right. Any other question? This 12. Man, I need to sleep. Oh. All right. You're welcome. Any other question? Let's take one more question. All right, please, how can I set my trading view frame to be black? I'm still trying to understand that question, but I don't know. Probably maybe this is what you are looking for. You can just use dark mode. There's white mode. You have to use this white mode, everything gets white, and if you have to switch to a dark mode. Hey! Oh my god, everything switched to be black. Alright. So you get the idea. I think I should stop recording now. Stop recording now.